In this video, I'm going to test a trading strategy which uses a 2-period RSI indicator. Not every strategy that I test and document here on YouTube is profitable, but I'm pleased to tell you this one is. So if you're looking for easy to trade strategies for Forex, then I think you're going to find this video useful. I didn't discover this strategy myself. Credit for this idea goes to Scott Welsh. He outlined this idea on a recent video of his talking about trading on longer time frames. But I liked the idea and I thought I'd test it out myself to see if I also got some positive results, which of course I did. This strategy specifically is for use on pound-yen Forex pair, but if you stay to the end of the video, as a bonus, I'm actually going to test it out on 8 more Forex pairs to see if it's usable on any of those too. If you don't already know what RSI is, it's an indicator or an oscillator, which most charting packages have. We're going to just apply this to this chart using TradingView. Search for RSI, which is also called Relative Strength Index. In its standard calculation period, it uses 14 periods or 14 daily bars in this case. But we're going to actually speed this up. We're going to use a much shorter 2-period RSI. And what that means is it's going to be much faster to react to changes in price. And we're going to be using the standard overbought and oversold levels of 70 and 30 for this strategy. Larry Connors and Cesar Alvarez have done a great deal of work using a fast or a 2-period RSI. And they found some very good ways to time entries to the S&P 500. I've actually done quite a few videos documenting some strategies or some modifications using that RSI2 on the S&P 500 as well. When used for the S&P or stocks, we want to buy into oversold levels. We're looking for very short-term weakness and then buying and then hoping to get a reversion back to the mean. But with the strategy that I'm going to show you today on pound-yen, we're pretty much doing the opposite. We're not buying into weakness, we're actually buying into strength, and we're also short selling into weakness. Different markets can move very differently, and while the S&P 500 on a daily time frame is very mean reverting, pound yen is pretty much the opposite. Pound yen responds very well to actually buying breakouts or buying into strength, catching the trend rather than mean reversion like on the S&P. So we're looking at a daily chart of pound yen, okay? Once we have the chart, we want to be putting on that RSI indicator. And once we've got the indicator on there, we want to change the length to 2. That makes the oscillator react that much faster. And then we all know what these oscillators look like. They're going to be up and down like this. We're looking at key levels of 70 and 30 for our oversold and overbought. The entry for a long trade is when yesterday the RSI was below 70 and then today it's closed above 70. So if it closes above 70, that's a signal to buy. If we're already in a short trade, then what we do is we exit the short position and then we go long, then we buy. Okay, so that's a stop and reverse. And the same for a short trade. If we're above 30 and then today it closes below 30, that's our signal to short sell. If we're already long, we get out of our long trade and then reverse the position and go short. Okay, that's the stop and reverse element. And this is quite the opposite of how we use RSI2 with the S&P 500. With the S&P 500, for example, on the daily chart, a good strategy is to look at a 10 level down here. And when the RSI2 oscillator drops below 10, that's a good time to buy. But for pound yen, we're doing the opposite. Pound yen responds better to breakouts into strength. Okay, so we're looking for buys up here and sells down here. It's that simple for the entries. In Scott's video, he mentioned a few different exits, profit targets, a stop loss, and a timed exit. I'm going to test all of those, but then in addition, I'm also going to test a bailout exit or a first profitable close, and then also a trailing stop which is going to be using the highest high over X number of bars and the lowest low. I'll test which length for that works the best, and you can use a Donchian channel for that on your chart. But firstly, I need to see how this strategy performs just using a stop and reverse type exit. Stop and reverse means that we're always in the market. If we're long, then the only way that we exit is if we get an entry signal to go short. So if we are long and we get that short entry signal, we exit our long position and then reverse and then go short. That's why it's called stop and reverse. The testing I'm doing is going to be done using FOREX data from LMAX, and I'm going to be doing that from January 2011 through to July 2022. And we're going to be using one full lot, or 100,000 units. I haven't included any costs in this test, and we know how important costs can be. Those of you who follow along my videos will know that. However, when we go and look at the strategy, we'll see that the size of the average profit per trade is so large that a small few pips worth of costs aren't going to be very significant, and they aren't going to completely change the profitability of this strategy. So don't worry too much about that. In this first workspace, we are going to see the results of the strategy using just the stop and reverse exit. No different exits, no stop loss. And we can see that we're always in the market. Look, we go short, we exit the short, we go long, exit the long, we go short, and always in the market. So let's look at the results. Making 16.8 million yen over that time period. There's the equity curve, very nice equity curve. $457 trades. We've got an average trade value of 36,000 yen. That's equivalent to 36 pips. Percent profitable. It's a trend following strategy. Not very profitable. 42%. But first things first, let's look at putting in a stop loss. So in this workspace, I've done an optimization. Scott suggested using a 260 pip stop loss, but I've actually run an optimization from 0, which is the results we've seen just now using no stop loss, right the way through to 5, which is equivalent to 500 pips. And I've gone in steps of 25 pips. And we can see from these results that the best stop loss value in terms of net profit is actually 250 pips. And looking at these net profit values, we've got 18 million, 18 million, 18 million, 250 pips, 275 pips. So Scott suggested 260, which is about in the middle, and I completely agree with him. These results agree with that, don't they? So let's select 260 pips and we see how that has changed. You can see that I've got it here, 2.6 or 260 pips. Our average trade value has increased slightly. The win rate is about the same. We know that we're making a little bit more money, 18.5 million yen. And the equity curve is fairly much unchanged, still very nice. Now we're going to look at some fixed pip profit targets. Personally, I don't use profit targets all that often in my strategies. And seeing as this is a trend following strategy, I tend to like to let the trend run for as long as it can, rather than to cut the profit short using a profit target. I do find that often the stop and reverse exit for trend following does work best. That being said, as long as we have a re-entry signal into the trend, profit targets can work. For example, if we had a profit target of 300 pips and we got onto a trend and we got to 300 pips and we took our profit, but then that same trend continued to run to maybe 1,000 pips in profit, we would have missed out on that 700 pips unless we had a re-entry signal to get us back in after we've taken our profit. And luckily with this RSI2 entry signal, we do get them very quickly. So generally we are going to get re-entry signals which will allow us to capture more of that trend. Scott found that using a target for buy trades or long trades of 1,000 pips and for short trades using 650 pips works quite well. I've run a test on both of those, so let's see if my testing agrees. First, let's have a look at the optimization for the short profit target. And I've gone from 0 right the way through to 1,500 pips. And looking down the net profit, we can clearly see that there is some good numbers here. 500 pips, 550. Where's the best? The best is 21.7. Yes, the best is actually at 500, but anything from 500 through to maybe 700 works pretty well. For this is the short profit target, and Scott suggested 650, so I agree. 650 does work well for the short profit target. So we'll select that and then have a look at the long profit targets. Here we've got our long profit target, the same from 0 through to 1500 pips. And while we see some good numbers around 550, we do also see a lot of good numbers from 21 million, all in the 21 million range, from about 950 also. Scott suggested 1,000 pips, which is here. So yeah, I agree. 1,000 pips does work quite well. Although in this test we can see that using 500, 550 also works quite well. But we'll stick with 1,000. So let's select the long profit target of 10, which is 1,000, and short 650. And we've still got our 260 pip stop loss. There's the equity curve, probably a bit smoother. We know we're making just over 21 million now. Percent profitable is very similar. Average trade has increased again. Now we're up to 44.6 thousand yen. So far, so good. Next, we're going to be having a look at a timed exit to see if we can improve the strategy further still. Results are already pretty good for this strategy, and it's a strategy that I think some of you will definitely want to use. However, if you are looking for more strategies, perhaps shorter term ones, then you should probably grab my 22-page Beat the Market Strategy Guidebook. It's completely free, and it's a PDF report which you can download immediately. It's got 3 more strategies, mechanical, a little bit like this, and I'll link where you can download it down in the description down below. But if you want even better strategies, and I'll show you the best way to trade them, then you should probably check out my paid course. In there, I list 6 more strategies, and if you're a multi-chance or TradeStation user, I'll even give you the code which you can then import, and then you can test the strategy, you can modify it maybe, or trade it in an automated way. But all the strategies are still 100% manually tradable, so you don't have to have TradeStation or multi-charts. You can trade it just on a regular trading account too. Same as with the PDF, I'll leave the link down below in the description for that as well. Okay, let's have a look at this timed exit. Before we have a look at the results of this timed exit, let me just explain how it works. Now, Scott found that 8 days works. So the minute you're in a trade, we count the number of days, and after 8 days, if we haven't already hit our profit target or our stop loss, then we just exit the trade after the 8 days. But I'm going to test what works best. I'm going to test between 0 and 20 days. And while I don't expect putting a timed exit on the strategy to actually make more money, it can be quite nice to have a timed exit. Psychologically, it can be quite nice to trade, knowing that you're only in the trade for a maximum of 5 days, for example. So let's have a look, see what the optimization shows. And you see that I've optimized the input, my timed exit, from 0 days through to 20. Using 0 doesn't mean that we're getting in and exiting straight away. It just means that we're not using a timed exit whatsoever. And we know that we've already seen results for that, making 21 million. So looking down the net profit, we see that timed exit of 1 day is pretty low, and it gets better and better and better until we get to about 6 days. Looks pretty good. Then it drops off slightly. The best being, is that the best, 11 days? Yeah, it looks like the best is actually an 11-day hold. 6 days works quite well. Scott suggested 8, which I guess is somewhere in the middle, so that does work. But essentially, if you want to use a timed exit, I would suggest anything between 5 days, because that's 19 million and above. So let's select the 8 days and have a look at the performance report. It's dropped our average trade down from not using a timed exit. Percent profitable has gone up ever so slightly. We already know it's 19.4 million, and the equity curve is just as nice, if not nicer. Now I'm going to test another couple of exits. One of them makes more sense than the other. Firstly, I'm going to look at the bailout exit, or the first profitable close, which means that as soon as we're in a trade, at the end of the session, or the end of the day, we look to see whether we're in profit or not. If we're in profit, we bail out. We take the profit and we exit. If we're not in profit, we leave the trade open. For this test, I'm going to remove the fixed pip profit targets and the timed exit, but just leave the stop loss in. Somebody actually asked me to test this exit, but I don't think it makes too much sense with this trend following strategy, because as soon as we jump onto a trend, we want to be riding that trend as long as possible. We don't want to be bailing out quickly, but you never know. We'll have a look at the results. We can see on the chart, these trades don't last very long at all. Looking at the performance report, nice equity curve, although up until the end of 2019 onwards, the curve has flattened a bit. Perhaps this strategy using this exit is losing its edge somewhat. The net profit is way down. It was 21 million before, now just over 12. More trades, obviously, because we're getting out much faster and getting a re-entry. Percent profitable has gone way up now. We're almost 72%. Average trade is much smaller, to be expected, because we're not holding the trades for that long. Now it's only 16,000 or 16 pips. And even with costs, we're still going to be making money using the bailout exit. So it's an exit strategy which doesn't make any more money, but it could be worth trading, especially for some of you who like to get out of trades faster, and those of you who like a higher winning percentage. The other thing I could try, which I often use, which works quite well, is a bailout exit with a timed delay, saying that I need to stay in a trade for at least 3 days, then have a look at the bailout exit after each day, or I need to stay in the trade at least 5 days, 6 days, 10 days, and then look at it. I haven't tested that now, but that could be something worth looking at. If nothing else, I'm sure it will increase the average trade value. That brings us to the last exit that I want to test, which is the trailing stop loss. And I think that does make more sense, because we want to ride the trend, trailing our stop loss up as the trend goes, or down if we're short. You can use a Donchian channel for this, and I'll demonstrate that on the chart. The cyan lines here are the Donchian channel, and it's a very short Donchian channel. I've just set it at 3, and it's looking at the highest high over the last 3 bars, or the lowest low over the last 3 bars. So look at this trade here. It's a buy trade. We got in the trade, and then as the trade goes in our favour, as the price goes up, so the stop loss, or the Donchian channel, actually comes up with it, until finally we exit here. And we exited here because on the bar before, price of the lowest low over the past 3 bars, so 1, 2, 3, so this low here, we can see that's where our stop loss would have been moved to, and then the next day it hit that and we exited for profit. So we're using the highest highs and the lowest lows over the last X bars, and I've tested the X bars. I've tested from 1 through to 15. Using 0 is using no trailing stop loss whatsoever. So looking at the numbers, 1 doesn't work very well. Profit starts to go up and up. So anything above a 5, so if this is 6 and onwards, anything from 6 and onwards works similarly to not using at all. And we'll probably find that actually we're not, even though we've got it set at 6, we're probably not using it, because what's happening is we're probably getting an exit because we're getting an entry to go in the opposite direction. So by this time, the trailing stop is probably actually redundant. But as I've already got 3 on the chart, let's have a look. And I'll just show you in the settings, we've got trailing stop length of 3. Percent profitable is actually down, Average trade is down, it's 31,000. We saw the net profit, 16 million. And the equity curve is still good, but probably not quite as good as some of our earlier testing or our earlier exits. So you've seen a lot of variations of different exit strategies. And the good news is that they all work. Which one would I choose? Probably none of them. Just the stop loss and then the plain old stop and reverse. But you've seen the results, you've seen the effects of each different exit strategy, and probably one of them would suit you better. Which one would you prefer? Comment down below, let me know. Now, lastly, as promised, I've tested another 8 Forex pairs using the same strategy. And we're just going to use the stop and reverse exit to see if there's an edge. And for this, I'm going to use Multichart's Portfolio Tester, which allows me to use exactly that same strategy and test it on a multiple of markets and test them simultaneously. Now we're looking at Multichart's Portfolio Trader, and you can see down here is the list of the Forex markets on the 1440 minute or the daily chart. We know that we've already tested pound yen, but we're going to test all of these others as well. The strategy which we're going to be using is just the stop and reverse strategy. So let's have a look at some of the results. In this part of the report, we can see we're looking at the breakdown of symbols. So in each strategy, it shows us our net profit. And we can clearly see, well, we will go through these one by one, looking at the equity curves. We can see that pound yen, we've already seen pound yen, and euro yen looks quite good. But let's individually go through and look at the equity curves. This is Australian dollar, US dollar, obviously doesn't work. Euro pound, obviously doesn't work very well on that either. Euro yen, this one does show some promise, so that's quite interesting. Euro dollar, doesn't work. Pound dollar, doesn't work. There has been some times where it has worked quite well. US dollar, Canadian dollar, doesn't work. US dollar, Swiss franc, no, doesn't work. Dollar, Japanese yen, no, doesn't work. And obviously pound, Japanese yen, we know that works the best. So the one that really shows some promise is euro yen. Obviously we haven't got a stop loss at the moment and we're not using any of those extra exits. Those studies could actually be for another video, but for now euro yen does show initially some promise using the stop and reverse strategy. So that's about the end of this video here today. Thanks again for Scott Welsh, from who I got the idea for this video in the first place. We've seen how to use a fast RSI setting to trade the daily chart of pound yen Forex pair with a multiple of exits which all work. We've also seen how it doesn't work very well on most of the other major Forex pairs, apart from possibly euro yen. That might be worth taking further. If you'd like me to do some more development, maybe introduce some different exits for euro yen, then please comment down below and maybe that will be a future video. I'm sure we'll be able to find a working strategy on that pair. So I hope you've enjoyed this video. If you have, please give it a thumbs up and please subscribe to the channel if you already haven't. And I know if you are looking for strategy ideas, then you would have found this video helpful. And I thank you for watching through to the end. I'll see you next time, but until then, this is Jared Goodwin, and thank you.